Hey guys, it's Toby Mathis, your favorite tax attorney and financial translator. Well, if you've been wondering whether the IRS is really going after wealthy taxpayers in 2025, the answer is an astounding yes, and I have the receipts. So, in today's video, I'm breaking down a just released government watchdog report from the Treasury Inspector General of Tax Administration showing a major shift in audit strategy and what it means for you. This comes right on the heels of the One Big Beautiful Bill Act, which reshapes the tax landscape. So grab a cup of coffee and let's get into it. First, some background. Back in 2022, the Inflation Reduction Act gave the IRS a massive $79 billion boost, with over $45 billion earmarked for enforcement. You might remember the headlines of the IRS hiring, 80,000 new auditors and promising to target the rich. The idea was pretty simple: audit more wealthy taxpayers. But Congress later cut that down. Enforcement funds were slashed to just $3.8 billion by 2025, and then DOGE got into the act promising to cut the IRS workforce. Well, they did so quite successfully, really. They cut about a third of the agents. Even so, the IRS pressed forward, and a Treasury memo said, do not increase audits on small businesses or anyone making under $400,000 while continue to target the wealthy taxpayers. So what's happened? Well, the new report shows audits for high-income taxpayers, that means over $400,000 in income, have more than doubled in 2024 compared to the average of the previous 5 years. Audits overall, though, are down, with overall individual audits falling from an average of 485, or really it was about 481 and change per year between 2019 and 2023 to 425,000 in 2024, which is really about a 12% drop. But that only tells part of the story. So for taxpayers under 400,000, the number dropped from 452,000 per year to 354,000 per year, which is about a 22% drop. So just think about that for a second. If you're under 400,000, your audit rate dropped by close to a quarter. If you're over $400,000 a year, it went up like 250%. For taxpayers over 400,000, the numbers went from 29,000 to over $70,000 per year, close to 250% increase. So what really changed? Well, audit plans in 2024 focused on the wealthy taxpayers. 17% of all audits were for high-income individuals, and that's up from just 6% before. So let that sink in for a second. Audit rates historically in the last 5 years, let's just use that period of time, from 2023, 2022, 2021, 2020, 2019. For those years, it was about 6% of the audits were the wealthy. Now, considerably higher, right? The small business self-employed division massively shifted audits away from low-income filers and towards those making over $400,000 or more. The large business and international division did the same. Over 60% of their audits in 2024 targeted high-income earners, and that is up from a historic average of around 40%. So you're seeing major increases in targeting those making over $400,000. So yes, if you're making over $400,000, the IRS has officially zoomed in on your return. But here's the catch. Even though the IRS is targeting the wealthy, the rules to how they're doing it are still a little bit fuzzy. They haven't really defined exactly what counts as a small business, for example. It seems like less than 10 million in assets, but there's no definitive word, and they haven't addressed how a married couple filing jointly could be unfairly treated under this flat $400,000 threshold. It seems like punishment to married couples unless they elect to file separately. They're not using the best data sets to track compliance either, something we heard from DOGE. The systems need upgrading. It's kind of like garbage in, garbage out until you really can trust the data that they're giving. So in short, they've increased high-income audits, but they haven't fully finished building the framework. That makes it a little bit like flying the plane while building the wings. So what does this mean to real people like you and me? Well, if you earn over $400,000 or have complex tax filings, expect more scrutiny. especially if you own partnerships, corporations, or multiple rental properties. You might want to explore strategies to reduce your taxable income if you're worried about an audit. Now, keep in mind, the audit rate is still really, really low. Like we went from 29,000 a year to 70,000 a year. It's not a huge number compared to the total number of returns. But if you're under that income, including earned income tax filers, your audit risk just went way down. Like that's actually good. It dropped from, basically 18 to 15% for taxpayers below 400,000 in 2024. So it went down quite a bit. Overall audit starts are also down in 2024 by close to 20%. So less people are being audited overall, but more than twice as many high income earners are being audited. So this is a warning for the high income earners. Even though the IRS is dealing with staffing cuts and budget restrictions, they've still hired thousands of revenue agents and are using enterprise-wide plans to audit smarter, specifically for you. This is not the old IRS anymore. So what should we do? What should you do if you're a high income earner? Well, it's probably wise to review your last 3 years of tax returns to ensure you don't accidentally step into an audit. And if you own a business or are self-employed and are above $400,000, clean up your books. Make sure you have the backup. The small business division is gunning for you. If you're planning to use aggressive tax strategies this year, think twice. The audit algorithms are getting sharper, and they are selectively auditing a category of higher income taxpayers, and it's still gray. We don't know exactly what they're going for. There are a few things that we do know, though, and I'll use this as a things to avoid, right? Don't engage in listed transactions or anything that waves a red flag like, hey, I'm really, really rich. Or, hey, I'm engaging in an activity like trader status if you trade stocks. That's a big red flag. Or if you're a sole proprietorship, if you're losing money, or you're making over $100,000, you're in a high audit risk. We know that historically. And for everyone, it's wise to get a solid tax pro on your side. The rules are changing faster than ever, especially with this new One Big Beautiful Bill in play. Now, if you found this helpful, make sure to like and subscribe and share this with any business owner or high income friend that you have that maybe they need to hear it. And here's something you could do for me. Leave a comment below. Are you seeing more IRS letters lately? What are you hearing? And I'm curious about what's going on in the real world, and you guys are my line to it. So put it down in the comments. Until next time, though, stay compliant, stay smart, stay wealthy.